the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements for the day. Well, Singapore shares nudged above the flat line early on as investors continue to mull the state of the global economy. So if we look at the Straits Times Index, it was up a marginal 0.05% at 3,892 points at about 10:40 a.m. Singapore time. And that is with a value turnover of some 398 million Sing dollars seen in the broader market. Now let's take you through how the Singapore stock market fared at the close. The STI closed up 0.1% at 3,894 points. In terms of value turnover, we're looking at 1.33 billion Sing dollars. Gainers outnumbered losers 313 versus 192. Top advances for the day we've got for UASIS, GMHUSD and ST Engineering. And top decliners we've got here UOB, Avaga Limited and UOI. Now, in terms of counters to watch, we've got CapitaLand Ascendas Reit because the manager said today that it received in-principle approval for the listing and the quotation of up to 202.4 million new units of CapitaLand Ascendas Reit on the main board of the SGX yesterday. Now, elsewhere from China's factory activity in May shrinking for the first time in 8 months to gold prices edging up to hit a near 4-week high amid a weaker US dollar. We've got more international headlines in focus. Also on deck, what simmering trade tensions between the US and China mean for investors. And joining me on the line today is Dan Chung, investment specialist and trading representative at Phillip Capital. Dan, welcome.
Hey, hi, Tian Tian. Happy Tuesday. Thanks for having me.
Great to have you and happy Tuesday as well. And Dan, let's start off with the U.S. this time around. White House Press Secretary Caroline Leavitt, she said on Monday U.S. time that U.S. President Donald Trump and Chinese leader Xi Jinping, they'll likely speak this week, days after, of course, Trump accused China of violating an agreement to roll back tariffs and trade restrictions. Now, what does the news mean for investors and how did U.S. stock futures and Asian markets move in relation to the news?
Well, yes, it seems like the news has not injected much positivity onto the stock market. U.S. stock futures has remained in the red for most of the day, and I think that reflects investors' caution. While news of a possible, Donald Trump and Xi Jinping call might have sparked some interest, but market has already seen this kind of playbook before. Trump flip-flopping on tariff policies, which sort of create a credibility gap. So this has made investors wary of taking headlines at face value. And in Asia, right, it's a mixed bag. ASEAN market was mostly slightly up or slightly down on either side of the flat line, while China and Hong Kong stocks actually edged higher, likely pricing in a hope of easing tension. But overall, it's still very much a wait-and-see mood on the ground, I would say.
Okay. Now, then going back to the Singapore stock market as usual, our markets nudging slightly above the flat line today. How did the STI fare in your opinion? And any surprises when it comes down to the biggest movers and, of course, the sectors that they lie in?
Oh, yes. The headline actually, it has been, as you mentioned, it's only up a bit, slightly above the flat line. But we did see some stand-up performer. One of them is Yangzijiang Shipbuilding. 2 weeks ago, right, the company actually reported a robust order book of US $23.2 billion for 1Q 2025. I think that's a long-term positive. However, the new orders did slow sharply to just US $290 million last quarter, well below their US $6 billion annual target. So I think that's likely due to global tariff uncertainty. And as for the share price, right, after moving sideways post the result, the stock has finally caught a wave today, surging to an intraday high of $2.35 before closing at $2.31, up 4.2%. So it looks like investors are actually betting on the strong backlog and solid net cash position. And the other gainer, right, was actually ST, which has refreshed its all-time high to $8.02 during the session today. And yes, you heard it right, STNG with an 8 in front. So it has been steady institutional net fund inflow over the past 2 weeks, according to SGS data, and the stock was up about 2.5% today.
Okay. Now, aside from ST Engineering, we do want to have a look at CapitaLand Ascendas Reit, because the manager today said it received in principle approval for the listing and quotation of up to 202.4 million new units on the main board of the SGX yesterday. How significant of a development is this to CapitaLand Ascendas Reit, where its unit price movements are concerned?
Well, I think this move by CapitaLand Ascendas Reit is significant, but I think it's necessary in terms of capital raising. I mean, to bring in 500 million via this private placement to help fund the recent acquisition of the data center at 9 Tai Seng Drive and 5 Science Park Drive. But from a unit price perspective, right, this could be a double-edged sword as well. I mean, on one hand, the new fund can support growth or refinancing, which is positive. But on the other hand, right, issuing over 200 million new units will dilute existing unit growth. So it might cap near-term upside in terms of price movement. But I think over the long term, right, hopefully the stock price will just ride out with potentially good numbers in the coming FY.
Okay, and then from CapitaLand Ascendas Reit, let's have a look at Oxley Holdings. The group yesterday said that its wholly owned subsidiary Oxley Rising secured a sales agreement for 100 units at Integrated Development SO Residences in Kuala Lumpur City Centre, and that is for a sales value of around 67 million Sing dollars. What do you make of the move as well as investors' reactions today then?
Yes, this is definitely a positive headline. I mean, money coming in is always a good news, right? Well, it gives a lift to investor sentiment, especially given the slower property environment in Malaysia. I think Oxley has also shown progress in monetizing their overseas assets, which has been a concern for some shareholders for a while already. Well, in terms of market movement, right, it did generate some market interest as we saw higher than usual trading volume today. But price-wise, after an early surge to as high as 7.5 cents, it actually pulled back to 7 cents. So I guess investors are still very cautious and are likely to be watching for, some follow-through on the balance sheet improvement or more consistent execution.
I see. Well, if you're just tuning in, we're in conversation with Dan Chung, investment specialist and trading representative at Phillip Capital. Well, Dan, across the region, China's factory activity in May shrank for the first time in 8 months, indicating that U.S. tariffs are now starting to directly hurt the manufacturing superpower. Now, if we look at Caixin S&P Global Manufacturing PMI, that fell from 50.4 points in April to 48.3 points in May, basically moving from expansion to a contraction territory. That missed analyst estimates and a Reuters poll as well, and marked the first contraction since September last year. Lowest reading in 32 months. A lot of things, a lot of numbers and comparisons, but really how concerning is this for the Chinese economy and how the Chinese markets moved in relation to the news?
Well, yes, the drop in China factory PMI to 48.3, I think is definitely concerning. It signals contraction and marked the first pullback in 8 months, largely reflecting the impact of, the renewed U.S. tariff on China. And it also came in below expectation, which adds to the market jitters. But interestingly, Chinese market didn't sell off aggressively today. Market reaction was fairly positive, with major Chinese indices, be it whether it's Shanghai Composite Index or Shenzhen Component Index, they are all positive. Slightly positive, suggesting that the market may have partially priced in the slowdown, or are still hoping for some policy stimulus from Beijing. And not forgetting, just now earlier we had mentioned that a talk between U.S. President Donald Trump and China's President Xi Jinping may be on the card, providing some hope of U.S.-China trade de-escalation. So the data points, to a near-term pressure on the Chinese economy. I would say that sentiment remains cautiously optimistic, at least So, that optimism may wear off if the talks between the two presidents don't work out. Yeah.
I see. Well, finally, before I let you go, Dan, let's talk gold. It edged up to hit a near 4-week high today as a weaker US dollar and, of course, rising uncertainty over China and US trade relations boosted demand for the safe haven asset. I believe spot gold was up 0.1% at $3,381 US dollars and 13 cents an ounce at about 8:38 a.m. Singapore time. What are the levels then to watch for the yellow metal? Do you think there are more legs to go to this?
Well, Kentian, I'm glad you bring this up because I've been talking about gold for the past few weeks. Yeah, gold bounced to a near 4-week high in, I would say, a very classic market behavior. When the US dollar softens and uncertainties rises, especially with the US-China trade overhang, investors tend to flock to safety.
Yep.
So we just now have a quick look as of 5 p.m. just now. Spot gold was trading around the region of US $3,358. I mean, well, it did a bit from early morning. The elevated level show that safe haven demand is still very much alive and well. And I think going forward, right, the key resistance to watch is around the $3,435 thereabout. And if that fits convincingly, right, we could probably see a push towards the next zone at US $3,500. But I think if trade tension ease or the dollar regains strength, right, gold might consolidate. So for now, I would like to think that it has still some leg, especially if uncertainties lingers.
I see. Thanks so much for the insights as always, Dan. That was Dan Chung, investment specialist and a trading representative at Phillip Capital. Thank you so much for joining us on Money FM 89.3.
Thank you, Tian.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.